Good morning, guys, and welcome to today's edition of the London Session Open. Today is March 3rd, 2020, and it's 9:45 a.m. London time. We have some great news coming up from France in regards to the coronavirus. Very significant slowdown in coronavirus cases in France, and for the whole world overall, we're doing a bit of an improvement today. So we're going to keep an eye on that and sort of show you what I'm looking at. And we're going to use all that information to hopefully try to provide you guys with better idea of what the euro should be doing, what stock market should be doing, and so on and so on. Okay, so let's actually begin, and we're going to begin with taking a look at some of that data. And I have done like this aggregate number, which sort of shows you what's happening with all major countries that I track, and I track Italy, Spain, France, Germany, the UK, and the US. And those are sort of the big countries where things are the worst right now, and where people are sort of using information coming from those countries to have an idea of what's going to happen with the markets. So I'm going to do that. Let me just check that we are live. Yes, we are live. Good. So in regards to that, if you look here, we have seen a slight improvement. We reach a low of 10% already around March 20. Let's see here, March 20. Actually, doesn't say, but around March 29th. And since then, we pretty much linger on 10, 10, 11, and 10, and now 9. And in regards to France, look at these numbers. According to the data from Worldometer, we only saw a 4% growth rate in cases in France yesterday. France has been struggling, and it was in a very similar situation to where the UK is now and Germany until recently, when we actually leaped to a significantly lower level of just 4% growth. If you look at this is Germany, and you can see that Germany here is seeing stabilization around 8.7, which is a decent number, but obviously we want this to go lower. In fact, it's been at 7 and really struggled to trade below 7 on March 8. But hopefully they'll have that little push to the downside by next week. This is Italy, which is doing a very good job, and you can see here how their latest reading was for a 4.2 decline. So they've been around 4.1 already since, let me see here, since I added these little levels. Data points doesn't really show properly. March 30th. So this is March 30th, around 4%, which is really good. And then you have, this is the UK, where we're struggling a bit, around 14%, that we've been at 14% around these levels for quite some time. The quarantine measures were introduced on March 23rd. That day we had a 17% growth. And so we haven't really made too much progress here, but hopefully, we'll be much like Italy, because if you look at Italy, it was also going in the wrong direction, not really improving. Then we went a bit lower, and then we had that breakthrough level here in Italy. So this is the US, where things as well have done quite good. We're down at 14% now, and the numbers here have been improving significantly over the last few days as well here. So it's actually looking really good here as well. Of course, it would be better if we can go lower, and I think relatively soon we will go lower. Some of the reason why some countries are doing better, some are doing worse, is just because when they lock down. So Italy, for example, they already locked down on March 9, so they've been now in quarantine, national quarantine, for 25 days. You have France, which has been in quarantine for 17 days, but they're already at 4% here, so pretty much the same as Italy. So a great improvement here. And then you have the UK, which just been in quarantine for about 11 days and still has more to go. So hopefully, again, over the next week or so, we'll see lower numbers in the UK. And then you have US, which had very high levels, but on March 19th, they quarantined California, told people to stay home. And then on March 22nd, New York, and then many of the other states have followed. And here again, we've seen a decent improvement, and this is definitely going to go lower, I think, eventually. In fact, you can see how right now the US and UK are pretty much at the same growth rate. The difference though is that the US actually had significantly higher levels to start with. And then you have Spain, which is at 8%, and they've been quarantined for 20 days. And you have Germany, where they have sort of self-distant rules as well, and they've been in play for 14 days. The only thing we didn't touch upon here is actually Sweden. So they don't have like a national quarantine. They don't have that. They're being told to stay home, but it's up to them how they want to do. And it's not looking very encouraging over there in Sweden, where you had a growth rate of about 4% on March 17th. And since then, we pretty much lingered around. And now suddenly they start to sort of say, all right, maybe you shouldn't go on holiday because it's the holiday period over in Sweden. So people, they're telling them to stay home, don't leave if you don't have to. Now people are doing a good job. I mean, I know some people that are, quite a lot of them people who just work from home. But again, it's not like as strict as, for example, in France, where you can get a massive fine. I think it's 350 euros or something like that if you're out. And in the UK, they started to fine people as well just recently. So I think we're going to see some changes soon. Now, what happened here with the market is actually that the market decided to actually buy some dollars at the end. And I think the reason why we had that decline in the euro, remember I was bullish above this level. We traded lower yesterday, and the reason for that is because we have initial jobless claims from the US. Those numbers were actually much worse than expected. The US added 6.6 million new people, and before that was 3.5 million. So you're looking at significant number of people losing their jobs in the US. And I think the market here reacted in a way where the dollar strengthening overall, and I think it has to do with some people fearing what we saw before, which is when there's some real crisis, when things are really going bad, people just flock to the dollar. And it's because of what I said before. There's foreigners that hold significant amount of dollar loans, and then they rush to hedge these positions. So on the bad data, we saw this sharp decline here in the euro. Now, if we look at the euro today, it added to its losses, and below 109.05, this trend is bearish. So I think if we do go up to maybe 108.21, people are gonna sell, and then maybe gonna try to reach 107.39. As for GBP versus the USD, the market is also lower now. So what happened here is that the market went all the way up and then actually got a bit stale, and it's not good to be buying right now, because you have people that have been buying here, and this market has not been able to catch up. So what's happening here is that now it's finally catching up, and people that have been buying here since March 30th, they're getting a bit of panic now, and they're closing out their positions because they hold this for quite some few days, and they're not seeing the development they want, and then now this market is tumbling lower. Now, for now at least, like you have other pairs like Aussie dollar, New Zealand dollar, and dollar CAD, they're all favoring a weaker dollar, and the euro is the only one that I'm bearish on right now. So we'll see, but I do suggest keep an eye on Aussie dollar, keep an eye on New Zealand dollar, and keep an eye on GBP USD, because if we don't see a reaction on here, it could have been that the dollar again is coming back and it's going to become much stronger going forward. Now here's the dollar yen. So a few days ago we said look to sell on a break here, and we went down, and I said if we go up, look to sell again, and we went down. And yesterday I said if we go up to 108.13, it's time to sell again. And now we're at that spot. Now it's 9:54 a.m. in London. Markets don't turn around really quickly just like that, so I will probably wait a bit unless you're super confident, because this is the sell spot. But what I'm saying is they might push a little bit up, maybe to 108.60 or so when New York opens, and then after like 2-3 o'clock, maybe this is going to turn around. Before I forget as well, we have the known from payrolls, but the known from payrolls is, I don't think is as relevant anymore, because the initial jobless claims moves much more quicker. And the reason why people don't bother as much with initial jobless claims is that it's much like the number of payrolls, by the way. It sort of always shows a steady number, but the initial jobless claims is much more sensitive to the current situation. And if you look at the ADP number released earlier this week, it showed that the US just lost, I'm not even sure if it lost any jobs, but I think markets were looking for a significant decline. Instead, we saw a very small decline, if not a bit of a profit. So a higher, more jobs created. So the ADP one is lagging, and it's very likely that the NFP is gonna lag as well. And you saw then what happened yesterday, especially if you traded stocks, right? So you had some really bad numbers from the US, much worse than anticipated. The market decided to sell off. We pushed, but if you look at this, we just pushed into support. So we talked about buying here at 24.59 yesterday, and look, it was a good opportunity because we actually would have made some money on this because we're a bit bullish right now. We're in the profit area, or in profit. And so I would suggest forget about the non-farm payrolls. You can keep an eye on it, but don't get too excited and start to sort of put orders on just ahead, just during the event. That's what I would say. I would say stick with your technicals, forget about the numbers for a while, because as I said it before, I'm saying it again, S&P 500 had its fastest decline ever, apparently, well, since 1929 or something like that. So fastest decline ever. And what did we have now? We have our fastest, sharpest gain in jobless job losses ever, and we have huge number. So what did the stock market did? It declined hugely and quickly because people were taking positions ahead of the data. So the data, if anything, is just reflecting what we already know. And so far, the way people have been reacting here is that they say stock markets have fallen far more than what the economic data is warranting. That's what they're looking at. Of course, you can get sophisticated, like you have hedge fund people and stuff like that. They look at the change in the stock market, like what's a decline of 36%. What does that mean in form of GDP? That is, I think, what's happening here. So collectively, we have all agreed that the slide we have in the economic data is already been priced into the markets. Now that collectively, that collective thinking is gonna end probably on a break to 23.91. So when we take out this level, that's when people are gonna say, hold on, enough, this is not good data, let's sell. So just keep an eye on 23.91, and I would say forget about the non-farm payrolls for today. Same thing with the German DAX. I mean, the German DAX really attacked and charged towards the lower end here, and we were almost about to get stopped out and this idea would turn bearish, but we didn't. We might do that today, but no one knows really what's going to happen with the data. If anything, I think good data is causing the stock market to soften, and bad data causes the gain, which is again a bit of a other way around, right? So keep an eye on the levels. That's what I would suggest. If you see a break in the German DAX, you see a break in the S&P, that's a good sign that maybe the trend has now changed. Now this is crude oil prices. Crude oil prices are up sharply, and that's because you have a situation where the US, Russia, and Saudi Arabia could potentially come up with some sort of a deal that will limit production. Now the market declined sharply yesterday, so it would actually be better to buy early this morning. I'm gonna leave this the way it is. I'm not super confident, but I do think if we go down to around these levels, so around 23.95, some people want to accumulate, and at least for now the trend is going to be bullish about 21.66. This is gold. A few days ago we said look to sell here, it went fine. Then we look to sell here, it went okay. We went all the way up now because of the situation. People in gold prices are buying because I guess they are a little bit scared, and that's what we see in this. The trend is now bearish below 16.25, and I'll just leave it like that, but it doesn't look super encouraging that this market does not want to go down from the sell zone. It's stuck in the sell zone, but we're going to leave it like that for now. Yeah, I think we covered everything, right? So we covered your dollar, we covered pound, dollar, yens. Yes, we covered everything. And it's also now 10 o'clock in London, which means that I have to, unfortunately, leave you guys. I can see, though, in the chat, we have Vincenzo, so good morning to you. We have True Invention as well, and we have Maurizio. So good morning to you guys, and also good morning to everybody that's going to probably watch the recording of this presentation. Please like the video, And then especially if you're looking at the recorded, in the bottom, you're gonna be able to leave a comment. Just leave a little comment like a hello or thank you or good stuff, whatever you like. Why? Because that sends the signals to the YouTube algorithm that you like it. And what happens is that when you like it and you comment, YouTube is gonna say, all right, this video is actually liked by people. And then they show it to more people. And that will just spur me to continue to do this and to continue to help you guys as much as possible in these webinars. Okay, we're gonna wrap things up. Now, before I forget as well, we do have a free trading course with is sponsored by ATFX, which gives you access to our educational content. You can check it out here. If you sign up, you're gonna get a call from the guys at ATFX because the course is sponsored by them. It's a 4-hour crash course, brings you a lot of wealth of information, and it's all free. So I'll send that to you guys so you can read more about it here as well. And as always, if you have any questions, you can always ping me via AlexFX00. Have a great day, guys. Stay safe there, and I'll see you guys on Monday. Thank you.